Hi everyone, I'm Moronga Musetli, and now that we know what a loan is, what types of loans exist, and what exactly we might need before we apply for a loan, let's talk about how we effectively use the money we borrow from other people. There are many reasons to take a loan. You could have a wedding coming up. You could need to build a house, buy a car. You could have a medical emergency or a sudden death in the family. You may have to increase your business expenses and don't know where exactly to get that money from. Anybody can come up with any reason to get a loan. But here's the thing, because you can come up with any reason and it's relatively easy to actually apply for one, just meet the requirements and you get the money. The problem comes when we see the money. 100,000 in my account when there was 0 yesterday gets me very excited, and then I go buy food, then I buy lots of petrol, and next thing I know the loan is finished and I haven't done exactly what I said I would do. Now, if your loan is secured, you're kind of screwed because the bank expects that you did what you said you would do. You bought that house, you bought that car. So if you can't pay back that loan, you're in a lot of trouble. And if your loan is unsecured, well, the bank doesn't really care what you do with the money. So your discipline matters here the most. The most effective way to use a loan is to make it make money for you. Buy a house and rent it out. Buy a car and reduce your cost of transport by using combis or cabs or whatever it is you may be using. Get closer to home by moving into another place so that you reduce the amount of money you spend every day. Alternatively, get a bigger space for your business. Buy inventory, buy purchases or anything else that can actually help you make money. The key to having a loan and using it effectively is making sure that your money is not being taken out in order to pay the loan back. Because if your salary is reducing, if your revenue is reducing, then the loan isn't working for you like it could. Think of it as the same way with a business. A business has capital that it owns its investors, and the business will invest that capital into products that will make it money so it can pay back its investors. Same with a loan. You are the business who owes the bank the money. Therefore, make sure you invest it in something that will earn the money back, irrespective of what it is. Education, housing, cars. There's all sorts of investments you can go into, like stocks and bonds on top of that. And then you get your money back from making your investment and you pass it on to the bank. And then your salary and your revenue is never touched. It's really easy maths, guys.
When you go to the service providers or the loan providers, they will tell you the maximum that you qualify for. And sometimes you realize that you don't really even need that maximum. So what is needed is that you look at your own financial position and look at your affordability and look at the need that you'll be financing with that loan, and you know your maximum to say, I'm coming for 100, even if I'm qualifying for 500, I just need 100, because it is the 100 that I'll be able to afford on a monthly, and it is the 100 also that will enable me to continue with my business operations.
If you would like to know how much a loan might cost you, click the link below to visit Standard Chartered Bank's loan calculator page, and then you can put in your information and find out how much you'll have to pay per month. And then once you know that, catch our other episodes and stay friends with money.